Hey guys, how's it going? Things are getting spicy with Celsius. On behalf of the shareholders, the investors of Celsius, there is a class action against the company, and it's pretty crazy. So here we have the complaints listed out against the company. So what they have stated is the company deceived the investing public regarding Celsius's prospects and business. Wow. Artificially inflated the market price of Celsius common stock, allowed certain officers, directors, and insiders to generate enormous insider proceeds by selling more than 21.6 million of their personally held shares of Celsius common stock at artificially inflated prices, reaping more than $1.4 billion and caused plaintiff and other members of the class to purchase Celsius common stock at artificially inflated prices and suffer damages as the true facts regarding Celsius were revealed. So with all publicly traded companies, there's a vested interest to protect shareholder equity, to return value to shareholders and to benefit investors, right? They have a responsibility to make money. That is the whole point of, issuing shares and having investors put their money into companies. So it's not looking good for them. Buying stocks of publicly traded companies is fantastic. But you know what else is great? Owning your own company. That's where today's sponsor, Limits Express, comes in. They will completely manage an Amazon store just for you, where you can sell products like Colgate's toothpaste, Crest mouthwash, Dove soap. In order to buy these products for a bulk discount for very cheap prices, they have to spend more than $750,000 a month with these suppliers. And that's where you and 150 other clients come in to pool your money and to buy these products at a very cheap rate to sell at a higher rate. The key thing is Limits Express doesn't make any money unless you do. You supply the capital for the inventory and they do all the heavy lifting and you get to share the profits together. So I would never take a sponsorship from a business I don't believe in. And Amazon FBA is a completely viable strategy. And the thing is, Limits Express has a team dedicated with experience to help you start your own Amazon store. So if you're interested in starting your own Amazon store and making passive income, use the link below to book a 30-minute Zoom call with their co-founder, Kyle. And you can also check out their website down below. I haven't looked into the insider selling or anything like that, but it's quite normal for insiders and for the leadership in companies to sometimes sell stocks when the stock is at an all-time high, right? And that's where Celsius was, right? When they hit like 90 something dollars. But saying that Celsius deceived the investing public by showing their growth rates were extremely high, that's pretty worrying, right? I mean, obviously now the numbers have come down to earth and the stock prices followed suit, but this is really interesting to see unfold, and we'll just have to see the response from Celsius and see how this goes for them. Obviously, much of the growth, if you look at the numbers for Celsius, came from Pepsi, right? They were overstocking their inventory, and we don't know if Celsius was really, aware of this whole situation, or they were just in it for the ride. Pepsi was giving them lots of money to distribute their products in the US. So, it might just be negligence, just putting out these high growth numbers, and, they didn't expect it either, but we'll just have to see, right? So all throughout this violent downtrend, Celsius had a few fake outs, maybe this is the bottom, maybe this is the bottom. With all the news, with everything going on with Celsius, it's the end of the year. I definitely see more downside for them. But, the story, the fundamentals is pretty great. I have a lot of friends who drink Celsius. I see it all the time. It's definitely shelved, stocked in a lot of different stores, and they're just starting to grow internationally. So if all of this blows over, because this is not the first company to receive a lawsuit. So if Celsius is able to come down to this $10 to $20 range down here, and they reaccelerate their growth, whether it's internationally or both in the US and internationally, then it might be a really good buy. For me, selling puts on this company is the way to go, in my opinion. I didn't buy any shares on this way down. I didn't buy any shares on this way up. I only started buying the majority of my stocks around here. So I'm not really down that much on this company. So Celsius right now is not a cheap stock at all. It's still up really, really much so in the last 5 to 10 years. The price to earnings ratio is 30, right? It's in the 30s. So it's not a cheap stock. It's not a cheap stock. It's not a AI stock. It's not a tech stock. It is a energy drink company. And Monster has performed very well. Red Bull, even though it's not publicly traded, it's a very beloved stock, but it has a completely different kind of marketing behind that company, right? But if Celsius can reignite its growth, if it can show investors that it's still got a strong foothold in the energy drink space and it's gaining market share, it's expanding internationally, its growth rates are, pretty steady and increasing, then it's worth this price to earnings ratio. If they show that it's not, then it's a very expensive stock. Very, very expensive. So Nike is one of those companies that people are trying to find value in, right? They're trying to see if it's a good deal. And the thing is, there's so many headwinds against them, right? They weren't quick to innovate. They didn't have a really good e-commerce platform set up to take advantage of. And there's just so many leadership issues that they went through. So, they're trying to do a turnaround plan at this point, and they came on and said that it's gonna cost a lot. Look, it's gonna take a long time. It's gonna cost a lot. So they're very, very, very straightforward with it. But the market is basically flat on Nike at this point. It's fallen a lot. It's been beaten down. It's still not very cheap in my opinion, but it's a quality company, right? But it's not something that I would personally invest in. I wouldn't put a lot of money into a company like Nike. I look for more growth names that are recently profitable or going to be profitable. Those are where I find the most value for the long-term kind of investing. Companies that are going to go into a large total addressable market, and all they need to do is just take, a good chunk of that total addressable market and become profitable, and that's how they succeed. Well, Nike, they're trying to defend their position, so it's a really different kind of company that if you want to invest in, it's a really different kind of outlook, right, for Nike. Darden Restaurants, who owns Olive Garden and a bunch of other companies, they are doing really, really great. So it's not surprising, because every time I go to like an Olive Garden or like any restaurants, really, a lot of the largest restaurants, chain restaurants, they're doing really well. They're always really full. There's a lot of foot traffic. There's a lot of people going out and eating. So it's really not surprising seeing this at all. And their stock really benefited on their earnings day. They really surged. I think it was like 17%. After everything was said and done. So they did really, really well. And it's a good thing for the economy. I think people going out, this means that the consumer is still quite strong. People aren't, cutting this out from their budget or anything like that. So yeah, it's really nice to see that this is still strong. And it's such a large part of the whole US economy, right? People going out, enjoying their dinners and going out with their families, spending money. So yeah, it's really nice to see. Yeah, markets overall are shrugging off what they did a couple days ago. Looks like it was just a little blip overall. And the uptrend is still continuing. Nothing's been broken yet. We've seen so many instances where it's come down so much more, all throughout the year, right? Ever since July, right? And August was kind of rough, right? But overall, it's just continuing this trend line that's been started in the bottom of 2022, that's been continuing for the past 2 years. And yeah, we'll just have to see if anything significant breaks this uptrend. So Tom Lee did predict that we're going to keep going up, right, until probably the middle of 2025. And then at that point, we're probably going to experience some sort of correction, some sort of market event that causes us to come back down. And then at that point, we're probably going to go back up, according to Tom Lee. I really honestly wouldn't be surprised because, the next President Trump, he's pretty volatile. So there's going to be a lot of things that he's going to be pushing, a lot of things that he's going to be easing. So there's going to be a lot of positive things for equities and a lot of negative things. So it's just going to all come together, and 2025 is going to be a really, really interesting year. I'm going to be really looking forward to seeing what happens in the market. I obviously have my cash position in Fidelity, so completely separate from my stock holdings here, and it's about 50%, right? So I'm treating it as a savings account at this point, but in 2025, I'm going to start selling cash secured puts and make a little bit more income on this cash position. Overall, I'm really happy to be in my small caps. I think that they were the play, right? You can see that most of my companies are smaller market caps, my top holdings, and it's really rewarding to hold them because they have so much growth potential, and this environment is really good for them. But if we take a look at the entire Russell 2000 IWM, we're still at the same prices as 2021, right? So nothing has really changed for IWM. So if small caps do rise in general, if the Russell 2000 plays catch up with the S&P 500, we can see some of these really quality small caps also get a nice boost as well. So it's really, really interesting. It's been such a disconnect between the Russell 2000 and the S&P 500, and that's usually not the case, right? Usually they're pretty in line with each other. One plays catch up with the other, and at this point it's really lagging the S&P 500, and that's quite normal because at this point in time the largest cap companies are doing so well and their margins are just really, really good. Like, look at Microsoft's margins, Google, Meta, they're all doing so incredibly well, and these small caps are suffering because of the monetary policy and just overall the economy. But if you've been invested with these really nice small caps like Palantir, SoFi, you've been doing really well. But in terms of the entire small cap market, if they do play catch up, then these will also do very well. But honestly, at this point, Palantir is in the NASDAQ as well as the S&P 500. So I don't think we can call it a small cap anymore. It was a small cap, but at this point, we can't really say that. But SoFi is still, a small cap, and a bunch of other ones that we own. So yeah, at this point, we'll just have to see if IWM does catch up to the S&P 500. It'd be great if it does. I think it makes sense with changing policies and everything going on that it does catch up with the S&P 500 eventually. Also, for me, I like to look at SCHD. I like to see, for me, I like to look at SCHD as a gauge for value companies. So I think with the Fed saying that they're not going to lower rates as much, and the 10-year just staying really, really high, people are getting their dividend yield from completely safe investments like treasuries. They're not really looking into value. And this run-up with value was people were expecting rates to come back down, and where does that money go? They go to dividend stocks. They look for yield, and that's where ETFs like SCHD, they hold a bunch of dividend companies. Then those dividend companies are going to do well if yields come down. But since yields are, staying really high, and it just came right back down. Overall, this one-day spike in the VIX due to the Fed meeting, it's kind of been shrugged off at this point, like it has been the past 2 years. Any kind of volatility that has appeared within the past 2 years has been shrugged off. It's continued in this bullish uptrend. We'll see how long that lasts, right? Obviously can still last a really long time, maybe in the next 1-2 years, who knows. So please leave a like and subscribe if you haven't already. And what do you think about the whole Celsius situation? I know people are very, very passionate about this company. Either they love it or they hate it. So it's really interesting always to see people discuss this company. So let me know what you think, and I'll see you guys next time. Bye.